Hello traders, and welcome to the Hit the Mark Trading Daily US Dollar Index Review. My name is Martin Rimes. Today's date is Sunday, February 23rd, 2014. Now, before I start, I just want to mention on March 1, I am conducting a trend and momentum total immersion intensive boot camp. This is 6 hours where we really get rid of all the bad habits. We build a foundation based on the charts, based on a simplified methodology. Yes, we use an oscillator, and basically get you prepared for relaxed trading, okay? You will be able to immediately practice what you have learned. And then after you have the boot camp, I will send you video recordings so you have constant ability to reference the material. Now, I only hold this for a small group of people, and I don't hold that many of them each year. The other thing I want to mention is that I follow up with the video newsletter. So you see me calling trades in advance. You have instructor support by email. And the goal here is positive new trading habits and techniques to constantly reinforce your mind for an effective change, okay? So I really want to stress that this is a good course, especially for anyone who is struggling in the trading or looking for simply a more relaxed way to trade. Okay. Now, when you come to the website, this is the description. You go to the services page, and this is where you sign up. There's a drop-down menu. Okay. And again, each boot camp is going to come with the recordings. If you cannot make March 1, no problem. Buy the recordings, and you'll get a free seat when I hold the next boot camp. Okay. Now, while you're here, go to the contact page. Join the mailing list, and you'll have the opportunity to sign up for Rooster Call. Rooster Call is my early morning note to clients. I look at the charts, I look at the news wires, and I send out a very brief summary of what we should be aware of as we start our day trading, okay, or our swing trading, whatever. I do provide benchmarks for ES and the Euro. Okay, enough of this. Let's go to the charts. Remember that everything I mention to you in this recording is for your educational purposes only. Use my information as part of your own due diligence, okay? Good. Here's the charts. Now, I got the weekly chart up here, and you can see, well, a little bit of green here. See that? Why is that? Well, because we got so close to this channel line once again. Okay? So what we're expecting is that we probably will just run right back up here to 81.48 area. We need to see that level breached. That's why I have a chart alarm. Now, in the very big picture, hard to get excited when you see on the monthly chart that since 2008, well, we did have a flurry of activity in 2009, but basically we started a range in 2008, and we continued that range, testing it again in 2010, and now for well over, October 2011, you see how we've done nothing but bang up and down on this range. So all of the experts, the highly paid experts that are telling you, oh, buy US dollar, buy US dollar, buy US dollar, or sell, sell, sell US dollar, don't listen to that. Your better bet is to trade the bottom, expecting to go back to the top. Once you get to the top, get ready to sell the bottom, looking for price to return to the bottom. Now, this big line here on the monthly, this is a big deal. If we break that, then that tells us we're ready to run to 85. If 85 is broken, I'm telling you, it's a stone's throw away from 90. So that is going to be the big, big deal. Otherwise, we break through this line, we're going to 85. Okay? In the event we break through 79,500, boom, you already know where we're going. Okay? This is what price likes to do. Find support and resistance and then just bang back and forth. So as we look at the weekly chart, our indicator is stuck between plus and minus 100. That tells you it's choppy. The indicator's telling you, hey, it's choppy. Visually, we see it's choppy. So the line is holding. This is important. We have a series of higher lows. So, you know, the weekly is saying I'm trying my best to hold this thing up. Again, 79,500 is very important. Okay, so if we start moving back up at this point in time, we believe we're going to 81.48 area, 81.50. Breaking that, 82.40. Okay, now let me go to the daily chart. Here's the daily. And gosh, a little bit different perspective. I mean, yes, I see the sideways action. But notice we broke this line here. And it's very common to see price when you go out, retest it, move up, retest it, move up. And as we reject this resistance area, we fall back and just, you know, we're stuck between a support area and this. We're just totally stuck. Now, US dollar index trading is really good for swing. But intraday, I'm telling you, it can absolutely, it can run you like just bonkers, just crazy because of nothing happening. We had a few exceptions to that rule last week. So let's just measure what kind of money are we talking about. All right, now this is about $220, $210. Well, you know, you can get that in a heartbeat in the Russell 2000, you know? So the big moves here, this one was nicer, 285. But the big moves here tend to be when you can catch a good swing trade, okay? All right, so here's one right here. It looked like we started going up around, a little after 10 o'clock in the morning. Here's our long signal. So boom, we go up, and what's the big deal? $100. Not enough to really get me excited as a day trader, okay? Now, notice here's this line and this line that would qualify as a descending wedge, and they tend to break to the upside. Well, we broke up. Looking into Monday, here are the floor pivots to the right. And since we had a tighter range, the floor pivots are tighter. Okay. So let me just draw some lines here for us. What can we do here? All right, if we break through this black line here, well, I'll even color it different line. Let's color it blue. How do you do blue? If we break through the bottom here, we should understand we're going to run to where? A floor pivot. Why? Because the floor pivot is what the programs are traded, the trading programs are programmed to hit. All right, so there, with the potential, of course, to drop lower. Nothing special, okay? And notice this would be very close to a retest of this low. What else can we draw? Well, that's a line of a different color. Hang on. Okay. Breaking to the upside, automatically, you know, the first base hit is going to take this thing up here and likely try to retest this area right here. So let's just say let's just say we're going to run between the R1 and the 8044 area. Okay, obviously we can go higher. Now, we had a development in Ukraine where the parliament said, pack your bags. And I think the market may look upon that as a positive. So Sunday night trading could strengthen euro because of that. And if the euro rises, the US dollar is going to fall. So that's a geopolitical event, all right? A geopolitical event. Just want to do it. I just see I can draw another line, I think like this. Yeah. Okay. Boy, that makes a lot more sense. So now what we've done is we've shown that if we break higher, we're going to make a run all the way up here to the R2. So going into Monday, if you want to trade the US dollar index, you're going to be looking first for price to hit this area right here. And if we surpass that, boom, we're going up here to retest this channel line. Okay, we have gone down and now we're simply going right back up. Okay, again, the geopolitical event in Ukraine, I would watch Sunday night trading to see if they strengthen the euro on this news. Okay, very good. All right, that's it for this discussion on the US dollar index. I hope you find it enjoyable, and I will talk to you on Monday evening. Again, I'd like you to please consider signing up for Rooster Call. It's free. And if you are interested in trading trend and momentum, whether you are a day trader or whether you are a trader off of daily charts or weekly charts, this is the course for you. All right, I'll talk to you later. Bye-bye now.